What's going on, everybody? Welcome back to my YouTube channel. I do apologize, I've lost my voice. Well, I did a few days ago. I'm sort of getting it back, but it's still kind of difficult to fully talk. But I just wanted to make this content anyways because it's such a heavily requested topic, and I want to get it out there for you all to hopefully provide as much value and insight as I possibly can. And the goal is to impact your trading journey in a positive way. So with that being said, let's dive into the topic of this video, and that is how I've created my watch list and how I sift through it on a weekly basis to find trading opportunities. So that's what we're going to be talking about today. Now, as you can see on the right hand side of the screen, I have 15 or 16 pairs there. I have all the major currency pairs, and then I have a hand-picked selection of the minor currency pairs. So a lot of people ask me, why do I not trade all the pairs? There's like 28 currency pairs. I only have a select few for the minor currency pairs there. So that part is all personal preference, to be honest. There are certain pairs, for example, like Canadian dollar dominant pairs, that for some odd reason I have just never seen consistency with. From the 6 years that I've been trading, I've just never had good luck, I guess, with Canadian dollar dominant pairs, which is funny because I'm from Canada. So I don't have any CAD dominant pairs in my watch list. It's as simple as that. Now there's other pairs that I don't have on my watch list that typically just have a very high spread or just have very poor trading conditions overall, but especially during market rollover or the weekend closure. So there are certain personal preference type things such as that, which could be the reason why I don't include it on my watch list. The thing is, I think a lot of people really overcomplicate their watch list in terms of like overthinking what actually goes into choosing those pairs. There's this misconception that there's like some pairs that are so much better than the others. Everybody thinks that there's some holy grail that they need to be trading. If you look through the comments in my YouTube videos, there's just a million people saying, what's the best pair to trade? Especially with this strategy, everybody's wondering like, what's the absolute best pair to trade? There's no solid answer for that. It's literally just personal preference. And also all of these pairs have like seasons, I would call it. They have periods of time where they're consolidating for quite some time and it just simply doesn't fit my strategy. So I stay away from them. And then there's other periods of time where it's just a very consistent trend providing very clean and clear opportunities for entry. And I capitalize on that. Even though I have like 15 or 16 pairs on my watch list right now, every once in a while, I'll take a couple out, add a couple in. It really depends on the current situation of that currency pair. The main point I want to get across here is to not overthink it. There is no holy grail trading asset. They're all filled with opportunity at different times of the year, sometimes all the time during the year. So with that portion of the video out of the way, and hopefully you guys aren't getting annoyed by my voice, I'm trying my best here. I wanted to actually go through my watch list and show you all how I decipher which opportunities I want to take, especially if there's multiple pairs that are correlated. So for example, we're going to start out by going through AUD USD, Euro USD, GBP USD, and NZD USD because they are all crossed against the US dollar. So if I wanted to trade one of these pairs, how do I choose which one that I want to trade? Guys and girls, I interrupt this video to bring you some exciting news. I've started a new challenge with my new favorite prop firm, Aquafunded. For those of you who are not familiar with prop firms, it's essentially a platform that allows you to trade larger account sizes and you get a percentage of the profit that you generate. Now, this is a huge opportunity for undercapitalized traders because you, of course, don't have to risk your own money. Aquafunded always provides a 90% profit split, which is massive. It's easy to achieve profit targets and fast bi-weekly payouts. They have great reviews so far, and honestly, I really love how they're branded. Branding and marketing is a huge deal for me, and I really appreciate the professionalism that this firm has. This firm also has some of the lowest pricing that I've ever seen, and they of course offer a 100% refund on their challenge fee with your first payout. I'm currently up 2% on my challenge so far, and I'm really excited to keep you all updated on it. If you want to check them out for yourself, head over to aquafunded.com and start your challenge today. I'll of course have a direct link in the description of this video. So let's dive right into that. Currently we're on AUD USD on the 4-hour time frame. And as you can see, it should be a pretty clear short bias, meaning we want to have continuation sell trades, or at least we're hoping to find opportunities for that. And so most people utilizing the strategy that I trade would drag the Fibonacci tool from this swing high down to this swing low and be patiently waiting for a retracement back up into those premium levels and hopefully take price short down to the downside towards their take profit level. The reason that I don't have AUD USD red flagged on my watch list right now, which to me symbolizes an opportunity that is upcoming, is because I don't like how everything to the left of it looks. All of this. To me, that's a big warning sign because they're all just relative equal highs. And in my perspective, that represents liquidity, right? Resting liquidity above these highs. And that's a bit of a warning sign because it seems as though price would want to take out those highs and purge liquidity from them. Even though the structure in this price action is pretty clear and cut, I would stay away from this because of how this whole consolidation has formed and all of those relative equal highs just resting there, waiting to be purged. Now, if we compare that to Euro USD, this one, it should be flagged on my list. I don't know why it's not. This one is a lot more clear because we have that same bearish structure to the downside. However, we can clearly see that old highs were swept. So that's a clear liquidity grab, in my opinion. And then immediately afterwards, we saw a very high momentum push to the downside, breaking through previous structure. So this to me is like a textbook setup, right? The direction of the market is clear. The liquidity has already been purged in our favor. Structure has been very clearly broken, and there's easily identifiable imbalance here as well. So this would just require some patience until price comes back up into premium areas, which if I drag the Fibonacci tool, you can see right here. And then hopefully, if we're on the right side of the market, price drops. So I think that's a pretty good example of how you can disqualify a pair and then qualify another pair. Even though AUD USD and Euro USD are both crossed against the US dollar, and technically I have the same bias on both of them, Euro USD is just a much more clear textbook opportunity in my opinion. So I'd be more willing to risk my own capital trading this pair. So moving on to GBP USD, it's a pretty similar situation, but it's a little bit more subjective. We have that same liquidity grab right around here. However, I just don't like how these equal highs here look. So that to me is still just a bit iffy. Now I'm pretty confident that on any of these four pairs here, price isn't going to go push through all of these highs. I could be wrong about that. Of course, I don't have a crystal ball. I'm not always right. But in my opinion, I prefer to just take the clearer setup, right? So if there's any sort of question to me at all, like there is here and on AUD USD, I'll disqualify them from my watch list. And that's why I red flagged Euro USD. Now moving on to the last one, NZD USD. Okay, this one, similar to Euro USD, is a lot more of a clear picture in terms of liquidity purging and breaks of structure. So let me just annotate it for you. There's a very clear liquidity purge right here. This was pretty much an equal high to this high back here. So very clear liquidity purge. I'm very happy with that. And then price broke through this structure right here, which confirmed my bearish bias. So I'm actually currently involved in this trade. I held it over the weekend. It doesn't look that great so far, if I'm being honest, but let me explain why I took this one instead of just simply waiting for Euro USD. So the decision to take this trade instead of just waiting for Euro USD, even though they're both valid, is because of my personal experience with Euro USD. Oftentimes, once Euro USD gets going, it just goes. It doesn't always retrace to premium or discount prices. That's just based on my personal experience. But also, I'm personally comfortable with risking my capital on this trade. And if this is just a very early setup and I happen to be wrong and it hits the stop loss, I'm comfortable accepting that loss and then taking Euro USD shortly afterwards if the setup still presents itself, right? So this was simply just a risk that I'm willing to take. The setup presented itself from a technical standpoint, and my risk tolerance allows me to feel comfortable taking this even if it's a loss. I really couldn't care less. Both NZD USD and Euro USD are both very valid setups in my opinion. NZD USD just shaped up a little bit earlier, so we'll see what happens. I'm not too sure yet. Definitely more drawdown than I'd normally like to see, but that's okay. And yeah, so that's how I disqualify certain things, right? AUD USD and GBP USD were disqualified in my opinion because Euro USD and NZD USD were much clearer opportunities. All right, so now that we've covered how I disqualify correlated currency pairs, I wanted to show you how I just approach a normal asset by itself and disqualify it based on what I'm seeing in the charts, or qualify it if everything works out. In this recent price action here, you can see the price was very bearish. I personally know a bunch of people who got involved in these selling opportunities, as well as a bunch of people in my community. But for me personally, these recent opportunities here, let me draw them out with the Fibonacci tool. From this swing high to this swing low, and from this swing high to this swing low, let me extend them outwards so they're more visible. As I said, a bunch of people got involved in these opportunities, but for me, I wasn't interested. Well, to be fair, this first one here, I wasn't aware of. I didn't see it for some reason. That would have fit my setup because there was very clear imbalance here. We did break through structure right here, and it was just a very clear range to trade from. So that was a great trade. But this second one here, let's focus on this for a minute. So a bunch of people in my community took this, and I saw a bunch of people on social media taking this trade as well. This setup right here. However, for me personally, I did see this and I decided to stay away from it. The reason being, the first step in my trading plan is to see a very clear break of structure. To a lot of people, this might seem like a clear break of structure, and that's fine. To be clear, it is certainly a violation of structure, but I like to see full candle body closures above or below a previous high or low. So it needs to be very clear and obvious to me. This, in my opinion, could have been looked at more as a liquidity grab, or at least a potential liquidity grab. It just so happens that as price retraced to the upside and filled this imbalance here, the range was well respected and we pushed down once more. So that's great, and I'm happy for whoever succeeded in this trade. But for me personally, this is one way that I disqualify trades. So because of that wick closure there, it's definitely, like I said, it's a violation of structure, but it's not very clean cut for me. I don't like to see that. So basically that is what prevented me from taking this trade. Now, if I delete those and we can focus on the current range from this swing high to this swing low, again, some people might think that this fits the strategy, but for me personally, again, it's disqualified. So I'm hoping that AUD-CAD presents some new opportunities soon. But for me personally, I'm not interested in taking this one because if you guys have watched my full strategy video on this YouTube channel, one of the main confluences for me is to have imbalance, or fair value gap as some people like to call it, in or around the general area of my retracement levels, which is the 71 and the 79%. In this bearish range, the imbalance was all the way down here and all the way down here. So I don't necessarily have a solidified rule for this, but in my opinion, that's just way too far down in the range. I'd like to see it a lot closer to my retracement levels. Ideally, there'd be an imbalance right in between my two levels. That usually makes me feel really confident. I've had great results from trades like that. At least it should be like in this general area here, basically above the 50% line. Okay. So if I just pull up the fib tool here, let me enable the 50% line. Basically anything above that 50% line would be ideal for me. I'd love to see imbalance anywhere in that region, and then I'd be more interested in taking the trade. But because in this scenario, the imbalance is well below the 50% line, for me, this range just doesn't seem very convincing, which leads me to believe that this break of structure isn't very convincing also. Could that be potentially grounds for a market reversal here to the upside? Maybe. Again, I don't have a crystal ball. I'm not too sure. But for me, I'm not willing to risk my capital on this trade. So I'm not red flagging it on my watch list. It has now been disqualified for the foreseeable future anyways, until it shapes up a little bit differently. So guys, that's literally what I do on a Sunday or sometimes even a Monday. I go through this entire watch list. I compare it with my very specific strategy checklist. And if it doesn't fit the checklist, I don't red flag it on my watch list. If everything does check out, I do red flag it on my watch list. It's as simple as that. I believe that my strategy is one of the most mechanical strategies out there. However, with that being said, it's pretty much like 95% mechanical, I would say. There's always going to be a level of discretion when it comes to trading. So a lot of the times when I'm looking at these pairs, sifting through them and looking for opportunities, I'm using the 6 years of experience that I have under my belt. I'm obviously following my rules very diligently, but every once in a while there's intuition that comes into play. I don't believe in having a 100% discretionary approach. I think that's absurd, and I don't think that there's any long-term consistency in that. So that's why I am majority a mechanical trader. My system is very mechanical, very easily repeatable, and that way I get real results and real data over time that can be analyzed. If you're 100% discretionary, there's literally no data to analyze. It just doesn't, there's no logic there, because it's basically based on your daily emotions rather than an actual trading system. So I'm definitely not a believer in that. But yeah, this is how I approach my watch list on a weekly basis. Just like once a week at the beginning of the week, I sift through the pairs and I see what's available and I red flag whatever I deem valid and I share it with my community. So I really hope this video provided some insight. Again, I apologize for my voice, but I hope you could bear through it. I really hope I provided some value for you all. Now, if I did, please hit the like button. Subscribe if you haven't already. The channel is growing very quickly and I appreciate every single one of you for watching. and comment down below if you have any questions. I'll try my best to get to them. And yeah, I'll talk to you all soon.